We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. Periods following sharp drops in price charts historically provide highly critical signals for investors. These rapid pullbacks, driven largely by market psychology, are typically times when investors panic sell their positions and heavy selling pressure dominates the market. However, such situations are not just indicators of decline, they also often present a significant window of opportunity. History has shown that after these sharp and severe declines, prices often enter a notable recovery phase and begin a strong upward trend. These deep and pronounced rallies following declines clearly demonstrate how cyclical and psychological price movements can be. Such sharp pullbacks in the markets usually coincide with a phase known as capitulation. Capitulation is the point at which investors completely lose hope, sell their assets at significant losses, and exit the market. During this stage, volume increases, volatility spikes, and nearly all investors believe the market will continue to fall. However, when examining historical price data closely, it becomes evident that these moments often mark the end of a trend and the beginning of a new upward cycle. Therefore, the fact that the price has previously initiated rallies after such declines is technically important and offers clues for potential future movements. In the most recent drop, the price sharply moved down after breaking a support level it had held for some time, which may have caused concern among short-term investors. However, such moves tend to push the market into oversold territory, causing indicators like RSI to bottom out. Oversold levels often signal potential bottoms, and major players may view these levels as buying opportunities. As a result, the fact that technical indicators are beginning to give bottoming signals alongside the drop suggests the price may soon recover and potentially initiate a strong rally. When comparing similar past patterns to today's setup, there are striking similarities. In previous instances, the price experienced a sharp drop, moved sideways for a while, and then unexpectedly launched a strong upward move. These moves typically began when the majority of investors had stepped away from the market and volumes were low. This shows that the periods before a rally are often marked by quiet in the market. The price can suddenly move upward with high-volume candles, catching investors by surprise. Therefore, the current phase may be part of a similar scenario. From a macro perspective, positive developments in general market sentiment and improvements in certain economic indicators can boost investor confidence and reflect positively on prices. In particular, the clarification of regulatory developments, the entry of new institutional capital, or positive global economic data could potentially trigger a new bull market in the crypto space. As seen in past examples, a sudden piece of news or a favorable development can quickly cause the market to shift direction and explode upward. Additionally, the current price level may represent a technically critical area. The price, which has been moving within a descending channel for a while, may have bounced from the lower boundary of the channel and is now heading toward the midline. If this region is broken to the upside with strong volume, it's highly likely that the price will move toward the upper boundary of the channel. If this scenario plays out, we may once again witness the kind of upward momentum seen in previous rallies. This could lead investors to set new targets and bring the market back into a more optimistic psychological state. In summary, the fact that the price has launched strong rallies following sharp corrections in the past aligns with the current technical outlook. In other words, the likelihood of these past scenarios repeating is supported by both technical and psychological factors. Although the market may seem stagnant at the moment, this stillness could be the calm before the storm. When combining technical indicators, chart patterns, Fibonacci levels, and market psychology, the idea of an upcoming rally gains strength. However, as always, risk management is essential before making any investment decisions, and it's important to remember that the market can move in both directions. Therefore, being patient, evaluating opportunities wisely, and learning from the past will be key steps in this process. But we can't base the analysis on this alone. Let's also take a look at the other metrics. Stay tuned.
I'm interrupting the video for a moment, friends, because Bitunix Exchange has a great campaign. Here's how it works. After registering on the exchange via the link in the description and completing KYC, if you deposit $100 for your first deposit, you will receive a $20 bonus. If you deposit $500, you will receive a $100 bonus. And if you deposit $1,000, you will receive a $200 bonus. I think this is an excellent opportunity for leverage trading For more details, you can read the articles below. The link is in the description.
When we take a deep look at graphical and historical analysis data, we frequently observe that past price movements often repeat in similar ways at certain technical and psychological levels. In particular, large-scale price explosions in previous periods serve as valuable reference points for investors. The current price level closely resembles the structure seen at the beginning of a major rally in the past, suggesting that a similar price movement could potentially occur again. Therefore, if the price replicates the growth rate previously shown, a potential increase of approximately 500% from the current level is technically within the realm of possibility. Looking back at the backdrop of the previous major rally, we can see that both strong developments on the fundamental side and supportive technical structures came together. In such cases, the confidence and momentum that formed in the market led investors to take bolder positions, which in turn paved the way for a striking rise in price within a short period. Similarly, in the current chart structure, we can see early signals of a similar scenario forming. The increase in volume and the recovery trend in technical indicators suggest that the price may enter a new wave of upward movement in the near future. Although a 500% increase may seem aggressive at first glance, it is a known reality in the cryptocurrency market, especially in altcoins. Many examples exist where low market cap projects have experienced such surges when backed by solid fundamentals and a strong growth narrative. Within this context, if the asset being analyzed now recreates the conditions that supported its previous growth and investor sentiment aligns accordingly, a 500% increase would not only be technically possible, but also consistent with historical data. Technically speaking, the current price structure presents a recovery phase that is quite similar to the one that followed a bottom formation before a previous rally. Specifically, the price holding above a key support level and showing a short-term rebound may signal the potential for a much larger upward movement in the medium to long term. If the previous sharp rally from this support zone were to repeat, a move back to former highs and potentially beyond seems quite plausible. Another important factor in this process is investor behavior. During past periods of 500% growth, investor interest was very high, and the news flow supported this interest. At the current stage, if a similar news cycle aligns with the technical indicators, the likelihood of the price reaching the same level of increase becomes stronger. Rising interest on social media, forums, and news platforms, when accompanied by increased trading volume, points to the possibility of the market regaining similar momentum. In addition, on-chain data shows an increase in the movement of this asset from exchange wallets to private wallets. This is interpreted as a positive signal, indicating that investors are inclined to hold rather than sell. Similar data patterns were observed during the previous rally, which was followed by a dramatic upward price movement. In this context, if the price replicates its past growth rate, it could provide investors with a return of approximately 500% from the current level. To achieve this potential increase, a combination of technical and fundamental elements must come together. One of the most important of these is strong volume support. For a rally to be healthy and sustainable, trading volume must continue to rise. This shows that investor interest is growing and market confidence is strengthening. At the same time, upward signals from technical indicators such as RSI, MACD, and Bollinger Bands will serve as confirmation tools for investors. In the past, positive alignments among these indicators helped fuel significant price surges. A similar technical setup today could result in another major upward move. In conclusion, the 500% increase experienced in the past was not a random occurrence, but the result of a strong move supported by a series of technical and fundamental factors. Now, with similar technical patterns and investor sentiment forming at current levels, a comparable price surge is being considered. This presents a development that investors should closely monitor, and if managed with proper strategy and analysis, it could turn into a high-return opportunity. However, one important point to note is this:
Although historical data and technical analysis support the possibility of such an increase, there are never any guarantees in the market. Therefore, these analyses should be considered as probability assessments, and every investment decision must be made carefully within the framework of proper risk management. Still, based on the current structures, if a similar rally to the one in the past unfolds again, a 500% increase from the current level is technically possible. This analysis is based solely on technical data and the potential recurrence of historical price movements. Every investor should conduct their own research and manage their risks accordingly. The high volatility in the cryptocurrency market means that such rallies can happen quickly, but also that corrections may be just as sharp. Therefore, proper timing, patience, and strategic position management are of vital importance for investors in moves with such significant potential.
The price rising above the 200-day exponential moving average, EMA, and sustaining itself above this level is generally considered a strong structural reversal signal in technical analysis. Such a technical development indicates that market participants have reached a consensus on an upward trend and that the buyers have gained dominance. Establishing itself above a long-term moving average like the 200 EMA reveals not only short-term momentum, but also a shift in medium and long-term trends in a positive direction. This situation particularly attracts the attention of large investors and institutional players, as long-term investors typically take positions based on strong technical indicators that confirm the direction of the trend. In this context, the price breaking above the 200 EMA can be interpreted not only as a temporary jump, but also as the beginning of a new market structure. This technical level often acts as a resistance. However, when the price manages to break above this level, that resistance turns into a support. This transformation is considered one of the most critical indicators of trend changes in technical analysis. Continued price movement above the 200 EMA signals a significant shift in market sentiment and a notable decrease in selling pressure. Looking at past market examples, many assets have begun sustainable upward trends after emerging from prolonged bear markets and establishing themselves above the 200 EMA. The main factor underlying these uptrends is the restoration of investor confidence. The 200 EMA is a powerful metric that helps investors gauge the general direction of an asset. When the price moves above this level, there is a widespread perception that the asset has entered a bull zone. This perception leads to new buying interest and the easy breaking of previous resistance levels. Additionally, such strong technical breakouts are also detected by algorithmic trading systems. Many algorithmic strategies interpret sustained movement above the 200 EMA as a buy signal. This contributes to increased volume and further upward price movement. As market liquidity increases and price progresses by forming strong support levels, it lays the foundation for a healthier and more balanced bull trend. One of the most important indicators of this situation is the price struggling to drop below the 200 EMA during pullbacks and consistently attracting buyers from this region. Sustained price movement above the 200 EMA provides not only technical confirmation, but also psychological assurance to the market. Many investors consider this level a reference point. When the price is below it, the risk perception is high, while remaining above it makes investors more optimistic and willing to take bold positions. Especially large investors and fund managers show increased interest in assets that settle above this level. This leads to increased capital inflow and greater liquidity, which in turn promotes healthier price action. Maintaining the price above the 200 EMA can also trigger the formation of a new upward trend channel over time. Within this channel, the price continues its upward momentum by creating higher lows and higher highs. These structures are among the most important formations in technical analysis for confirming the strength of a trend. Particularly, price movements toward the mid and upper bands of this channel reinforce investors' confidence in the continuation of the uptrend. Therefore, price movement above the 200 EMA is highly positive both technically and psychologically. Moreover, this kind of technical setup is highly important for long-term investors. These investors focus more on long-term trend changes than on short-term fluctuations. A price that holds above the 200 EMA generally signals a potential multi-month uptrend. As long as this level is sustained, investors' risk appetite in their portfolios increases. More capital flows into the market, which makes it easier for the price to reach higher levels. However, the significance of staying above the 200 EMA is not limited to technical indicators alone. This technical development is often supported by fundamental analysis as well. Positive news flow about the project, strategic partnerships, technological developments, or regulations are among many fundamental factors that may reinforce this technical breakout.
The synergy between these two analytical disciplines increases trend sustainability and lays the groundwork for stronger price action. When the price rises above the 200 EMA and successfully retests and holds this level, this is considered a retest confirmation. This confirmation serves as an important signal for larger investors to enter. These types of investors generally take positions when the high confidence zone is reached and the technical picture becomes clear. Therefore, testing and holding above this level is crucial for confirming the trend. With all these developments combined, the continued price movement above the 200 EMA indicates upward potential for the future. When supported by both technical indicators and market participant behavior, this potential makes the emergence of new highs quite likely. Especially when the price advances while building strong structures around this level, it technically reflects the formation of a healthy bull structure. Furthermore, price movements above the 200 EMA often coincide with positive momentum in indicators. Technical tools like RSI, MACD, and stochastic usually begin to produce buy signals in these regions. This further boosts market confidence and buying pressure. Thus, price is supported not only by technical indicators, but also by investor behavior and the crossing of psychological thresholds. In conclusion, establishing and maintaining price action above the 200 EMA is highly positive not only in terms of technical analysis, but also in terms of market dynamics, investor psychology, and long-term trends. This level can mark the beginning of an uptrend and contribute to the formation of new support zones. Therefore, preserving this structure provides reassurance for existing investors and makes it easier for new investors to enter the market. As long as the price continues to stay above the 200 EMA, the long-term bullish scenario strengthens, forming a solid foundation for a sustainable bull trend. The 200 EMA is used for identifying long-term trends.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.